My portfolio hits ADH today. But I feel uneasy. I have been worried about valuations and investing with caution since at least 2021 or so, and probably for a long time before. At this point, I don't know my head from my ass, but I still stubbornly think it's overly euphoric right now. LOL, a refreshingly honest statement. The market is on another AI tear when the disruptive event that caused the dip in the first place hasn't been resolved. I don't think anyone knows their head from their ass except the insiders who know when the next tweet is coming. Zoom out. If you're up over 30 the last 6 months, what does it matter if the market corrects 5-10? If you need the money in the next 12 months, it shouldn't be in the stock market. Also, go out and drive around. Look at all the things that are happening every day. We are in a K-shaped economy and things are tough and wages are not keeping up with the cost of living. But I guarantee you the world is not ending tomorrow. I feel the same way, but I'm somewhat convinced by the argument that the market today is quite different from 2000. The dot-com bubble was composed of a lot of startups in an exciting but very nascent environment. Today, as high flyers are pretty well established and have actual revenue streams that aren't likely to disappear overnight. There are also significant barriers to entry for their competition. Sure, the Mag 7 valuations could drop significantly, but not to zero like many companies did. Buy and hold. You can diversify if you want or put into more ETF safer funds. I am very heavy in tech and just letting it ride. I think we'll know more after wet FOMC and Big Four earnings. This time in the market beats timing the market every time. If you had acted on those worries and cashed out, you would have lost out on a lot of gains, even factoring in 2022. Put some breadth in the portfolio. And a little dry powder on the side, 1T hurt. The stock market only goes up long term, so there will always be short term volatility before hitting new ADHs. It just rinse and repeats. I wouldn't trim Nvidia or any other quality compounder. Hold those for another 10 years at least. If you have to trim a little. I think OP is worried more about a 50 crash. The world 1T in tomorrow, but people are emotional and the market is extremely overbought, so any black swan event or series of missed earnings calls on the Mag 7 could cause people to start pulling money out of the market and send the house of cards crashing down. Lots of weak hands have been buying into the longest bull market in history, and not many here have felt true pain yet, testing their resolve to stay in the market. Young know what has been around all this time. Companies like ExxonMobil and Chevron, Texaco and PG. ATT, Verizon, etc., old boring companies. There is some survivorship bias there. At one time, Sears was the largest retailer in the world, selling everything, including houses and cars, and it had its own credit card. In the 1960s and 70s, its sales amounted to one of U.S. GDP. AP was the largest grocer in the U.S. from 1915-1975. I trimmed profit on SanDisk, bought a new TV and media stand. Kept the principal to grow again. That's a single-digit percentage of my portfolio, but I think it's healthy to take small profits and splurge. Overly euphoric is just 2026's version of irrational exuberance. Were you able to minimize your tax hit, or did you just take it up the A? Hey, Ariba still lives. Die Hard GIF, welcome to the party, pal. I've been holding for decades. Whatever's coming will come. If you can ride through it, you'll be fine. It's feeling you have to do something that gets you into trouble. Don't worry, hopefully it just keeps getting ADH after ADH between retreats like mine. It never stays at ADH long. You already know your portfolio is very AI concentrated, so better get diversified. I have a diversified portfolio by asset class, geography, and sector. I review every 3 months and adjust where necessary to stay within my parameters. I review my parameters every year. No significant portfolio changes required. Is VT diversified enough? Wanna guess how many times my 35-year-old portfolio has been at an ATH? And what did I do? Absolutely nothing, winking face with tongue. I hear you, the disconnect in the markets has caused me trepidations as well. Here's my strategy: 50 of my portfolio in equities, principal protected notes, and 50 in a conservative allocation that I can deploy to equities in the event of a market crash. I feel I'm in a fairly strong position no matter what happens. However, I will note that I was tempted to buy the recent 10 correction, but didn't. I feel the markets will have further to fall over the coming year. However, a friend of mine. I'm an SP 500, so I don't care about tickers jumping around. If index crashes 20 tomorrow, I'll just buy more. I'm not all in, roughly 30 is set aside, but I do feel like my best hedge against the macroeconomic risks of AI is to maintain equity in the companies participating in that transformation. The collective public should probably all own some of these businesses, as they're thriving from our shared ingenuity, but for now I have to buy my way in. Between that and the incredible inflationary pressure of the last decade, I don't know where else I'd turn. Like some others here, I've been through. Sell everything. How much cash are you holding in order to buy more when low? When you do a bulk buy like that, when do you replenish your cash reserves? Highly depends on age and how steady your income is. Similar position as you with the portfolio booming. I personally wouldn't mind a little market shakeup, as I would just double down and expand my share counts via cash. Did this at the beginning of the Iran conflict. GUG went down to 270 briefly. Many other examples. If your time horizon is at least 10 years, no need to concern yourself too much other than making sure you are happy with your picks. I have felt like this many times. But this is a valid trigger to look at your 1 leverage and 2 allocation to see if some adjustments need to be made. Of course, get rid of leverage. But the adjustments ideally are mechanical every quarter, not like this, with maybe a tiny exception when you really feel uncomfortable with the gains. And secondly, even if I adjust, I would adjust 2.5, which will not make a difference unless you are moving to cash, even if you are going from high risk NV. I put some weighting on efficient market theorem, but some on this also, link. So personally I might be around 2-3 RDS in stocks at the moment. I am actually less than that in Stocka, because I'm buying a house in the short term. Invested primarily in growth ETF major tech holdings up through 2025 to capitalize the hype, shifted some of that all new investments in large cap value ETF or value dividend ETFs for hedge. The tech companies are utilizing AI as a desperate attempt to rescue their stagnating profit rates. The fundamental financials behind all of it are purely speculative. When it comes time to realize profits will be a big moment, one way or another. The fact that the top AI companies that are considered increase your fixed income if you're feeling nervous about being fully invested. Capture some gains into bonds. If the market dips, buy back in. Whenever I feel uneasy, I just go back to the tried and true dollar cost average into a market cap weighted ETF. Really tough to know where markets are going. Protracted scenarios in Iran will depress a lot of stocks, Asian markets, etc., so it may be smart to stay in tech stuff for a while here. I'm pulling back on my speculative moral stocks, consolidating, but I'm keeping some tech stuff, hoping it's less affected by real-world supply chain issues. 30-year investor here. FIR at 49 2 years ago, and I always feel like the market will crash. Do you still keep the majority in stocks, or did you change your portfolio at all after FIRE? The problem with the market is that it is almost always at ADH, so you are almost always afraid of falling. Just keep investing your free income. If you are afraid of a specific concentration by the index, you could always be wrong when buying a certain stock, but the overall market will go up. Don't try to time the market. Just keep investing. All in, but I have a long ways to retirement. I'm saving to buy property. I have the 20 saved, but decided to leave it in the market instead of being safe. I'm focused on growth. If it tanks and I no longer have that 20, oh well. Not married to the idea. Nobody in the history of ever went broke taking profits. I used to get twitchy when things ran up a lot. I used to sell things after a big pump. I realized after a while that I really couldn't anticipate where things were going, and generally I missed out more than I secured. Now I just forget about it and keep adding. That said, my Alphabet position has now grown to 35 of my portfolio, so this week will be interesting. So that means you still have funds available to buy more. For me, I do use margin. And I need to reduce my margin. You don't sound very euphoric and bullish? So maybe we're not there yet. I also rode semi-S and RKLB boom for last 1-2 years and made decent gains to retire if needed. Going through same dilemma about moving into SPY. It is very difficult to see SPY dropping 20 in current environment. It can easily outperform most of the stocks and assets during recession. Be brave when you are fearful. I know a bunch of people who said that 13 months ago. And again 3 months ago. It's been like this for 2-3 years. People keep claiming the bubble is gonna pop, but it solidly keeps going up. It depends on your investing horizon emo. If I'm in your shoes but have 20 years, I may just ride it out as long as you have high conviction in your stocks. I've regretted selling and couldn't get myself to re-enter at higher prices. If I'm near retirement, then I would probably trim. In the end, we need to also feel comfortable with what we hold, so nothing wrong with trimming a bit in profit-taking ESP if you feel uneasy. Question is what to do with the money. What if the flash craws? I don't really see much euphoria. Euphoria is when any bearish sentiment gets downvoted to oblivion, when you see people talking about getting a loan or selling their house to increase their position, when everywhere you look, everyone is saying that the prices will rise indefinitely and that it's basically free money. Right now it's pretty much the opposite. The price action is ridiculously good, but most people, just like you, are being weirded out by it. Most people are saying that it's You're gambling. I'm investing. I'm long the market. Most markets are oversold and overpriced. The ADH unease is real. I usually convince myself I'm being smart trimming and then watch it run another 8 lol. I've started trying to separate the thesis changed from I'm just anxious because they feel identical in the moment. When the market seesaws, people are nervous. When it hits ADH, people are nervous. When it drops, people are nervous. Basically, if you don't get the line to go up straight for 10 years, people are nervous. All in. 90 AI. It'll be rocky at times, but it will pay off in the long run. Index is at ADH and hitting resistance, not a bad time to perhaps take some risk off and wait for a breakout or pullback. Always all in, baby. I am very confident this bull run still has runway.